Good morning, SMA TV. This is Narotama, serving you the most latest and the trustable news. Most markets fell in Asia on Wednesday, February 17, hit by profit-taking after a strong rally across the world in recent weeks, with investors worried valuations may have gone too far for now. However, analysts say that while equities have room for a drop, the general view is that they will resume their strong upward march as vaccine rollouts, slowing infection rates, and the easing of lockdowns allow economies to return to normal. Focus is also on Washington, as US lawmakers try to push through Joe Biden's $1.9 trillion stimulus package, the prospect of which has been a key driver of a months-long surge across global equities. Bets that the fast spending splurge will give an extra boost to the world's top economy, and the prospect of business reopenings have also fired inflation expectations, sending US Treasury yields close to one-year highs. That has led to concern about rising borrowing costs, which market watchers fear could stunt the recovery and hit consumer spending. The move up in yields has been driven by increasing inflationary concerns amid a rise in energy prices, along with the prospect of a big US fiscal stimulus and the global recovery entering a more solid state as vaccine rollouts lead to the reopening of economies, said National Australia Bank's Rodrigo Catril. Stephen Innes at Axis said in a note, "It's difficult to tell if we have reached any significant inflection points, but it's certainly starting to feel that the rate higher in US bond yields at least on the margins could be the match in the stimulus powder barrel." He added that traders remain confident the rescue package and Federal Reserve largesse, as well as reassurance it will keep monetary policy loose, will continue to lend massive support to market. After a mixed lead from Wall Street, Asian markets started, having enjoyed a clear run higher so far this year. Tokyo, Sydney, Singapore, Seoul, Mumbai, Bangkok, Jakarta, and Manila all fell, while Taipei and Wellington rose. Hong Kong reserved an early sell-off to surge more than 1% in the afternoon, to break 31,000 for the first time since June 2018. Fueled by huge interest from investors in mainland China, where markets are still closed for the Lunar New Year break. The market is fairly frothy here from a sentiment perspective, Liz and Saunders at Charles Schwab & Co. told Bloomberg TV. "You have to put a move higher in yields that goes out of the comfort zone as a potential risk associated with that." Still, the surge in yields indicates the outlook remains very upbeat. There's a great deal of optimism in the air, and that's one of the biggest reasons we've seen this rise in interest rates in the US and globally, Tom DiCaloma at Seaport Global Holdings said. Oil price dipped, having rallied more than 20% this year to 13-month highs, with added support coming from a big breeze in Texas that has hammered output in the key production state. Bitcoin is up slightly, having pulled back after topping $50,000 for the first time ever on Wednesday. That's all for now. Until next time, goodbye.